Well, hey, welcome back. Today we're going to be talking about how to use OPM to buy real estate. So we've all heard that real estate is the best way to create wealth. 80% of the world's millionaires have been created through real estate. But how do we do that if we don't have very much money? Well, the good news is whether you're a new investor or a seasoned investor, you can grow your portfolio to the greatest degree you want to using other people's money, OPM. And that's what we're going to be taking a look at today in this video, 7 big tips on OPM. Stay tuned. So first things first, what is OPM, other people's money? Well, basically, you got a couple of choices when it comes to buying real estate. You can come out of pocket, use your own money to buy it, or you can use other people's money. Exactly what the term says, other people's money. So it's anybody whose funds you are accessing to buy properties. That's what OPM is. And we really want to leverage that to scale our portfolios. So what are the big benefits of OPM? Well, bottom line is it allows you to scale, it allows you to do more deals and or bigger deals faster because you don't have to take all the time to save up or create the capital yourself to do the deals. You're able to jump right in because you've got access to the cash quickly. This is how all of the biggest real estate investors have grown their portfolios, is by accessing other people's money. So what are the different kinds of OPM out there? Well, there's kind of professional money and there's non-professional money. Professional money includes the banks. I mean, banks really are OPM, just a lot of other people's money, right? They tend to be pretty difficult to qualify for. Another professional source of money are hard money lenders. These are professionals that make their living by loaning out money for real estate deals. Tend to be very, very expensive, but it's a good option if you're looking for quick cash. Now, what are the non-professional sources of capital? Well, there's a couple of them. The first one is private lenders. Private lenders are similar to hard money lenders, but they're not professionals. So what's the big benefit for you? Typically, they're not as expensive. They're not as persnickety. They don't require you to apply to loan you the money. So private lenders are typically loaning you money. They don't have an equity share in the property. They're getting a fixed return on their money. They're getting an interest rate on their money. And last but not least, we've got joint venture partners. And these are people who are partnering with you on a deal in exchange for a share of that deal, in exchange for equity in that property. So typically there, you're not paying them a fixed percentage on their money. You're paying them a share of the profits in the deal. So those are the different sources of OPM. So where do you find OPM? How do you access other people's money? Well, it's pretty straightforward if you're looking for professional lenders. If you're looking for banks or hard money lenders, they're pretty easy to get access to. However, if you're looking for private money, if you're looking for private lenders or looking for joint venture partners, what I'm going to recommend that you focus on is your existing sphere of influence. What's a sphere of influence? It's a fancy schmancy term for your existing contacts and connections. Friends, family members, co-workers, business associates, people who you know and who know you. This is the safest, fastest, easiest source of capital that you have available to you. Why? Because these people already know you, they already like you, to a certain degree, they already trust you. And again, for somebody to invest with you, typically they need to know you, like you, and trust you. You've already got that all encapsulated with these people. So I'm going to recommend that you focus on your existing network first before you start going after other people. Because part of the other challenge is if you're starting to raise capital or try to bring on joint venture partners with strangers, you could be crossing the line with the Securities Commission, and you want to avoid that at all costs. So at least at the beginning, let's focus on your existing network first. Again, like I say, that's the only logical place for you to really start until you've built up a track record of working with investor partners. So the next thing we want to look at when it comes to accessing OPM is building up your credibility. We talked about 3 things being necessary to raise capital. People need to know you, like you, and trust you with their money. So if you're going after your existing network, that's a good start because they already know you, they already like you, they already trust you to a certain extent. Now we just got to get them to trust you with their money. So how do we build up our credibility? How do we become seen as an expert or an authority in the eyes of your prospective investors? Well, good news, it doesn't need to be that tough. chances are if you've got 1 or 2 or 3 deals worth of experience under your belt, you're already light years ahead of most of the non-real estate investors that you know. Most of these people have never purchased an investment property. In fact, the stat I've heard is that 90% of the general population has never purchased an investment property. So you even got one successful deal under your belt, you're already ahead of 90% of the rest of them. All right. So we need to let people know what we're up to. A couple of different ways you can do this. If you're big on social media, start showing people what you're up to. Don't solicit funds. Don't be actively saying, hey, come invest with me. Just show people, educate people about what you're doing. Do walkthroughs, do deal walkthroughs, do before and after pictures. If you're into rehabbing or flipping, take some before and after videos or videotape yourself at the end of a project or during a project. Walk people through, talk people through what's working, what's not working. Take them along the journey with you. So that's one big tip there. The other big tip is be seen as a credible authority in the eyes of your potential investors. How do you do that? You get the word out. You start letting people know what you're doing outside of social media. So create a list of investor prospects and then start with what I call constant, consistent, edutaining communication. So you'll be showing people a little bit about what you're up to with real estate investing. Don't make it too in-depth. Don't make it too heavy. Just give them the gist of what's going on and then invite them to reach out to you if they'd like more information. Create curiosity, get them to reach out to you to find out more. That's a big, big tip. Other things are, when you are talking with people about investing, dress business casual. Don't be too casual. Don't be too fancy, but dress the part. Dress the part of a professional. It's going to show them respect and it's going to get you respect back as well. Okay? Have professional materials. Have a sharp-looking investor-focused website. Have a sharp-looking investor pitch deck presentation. Have everything dialed in and looking sharp. Okay? A couple other tips for you. Get interviewed on podcasts. That's a great way to be positioned as an actual professional real estate investor. Speak at your local RIA, real estate investment club, meetup group, what have you. Get out there and have people see you as the authority. And then take that, put that up on your website and show people that you're out and about and other people see you as an authority. Get referrals, get testimonials, get all of these kind of things and get the word out about what you're up to. Stop being a best kept secret. Next thing you want to look at is having a solid investor presentation, a pitch deck, if you would. And this is what you're going to walk people through when they put up their hand and say, hey, let me know more about your deals. Now, some important tips about your pitch deck. Keep it super simple. Keep it fairly short as well. You don't want this to be too long. I'm going to recommend that you're shooting for about a 25 to 30 minute maximum kind of a presentation. Some of the tips for what you want to have included in the presentation are, a little bit about yourself and your background, what your major real estate investing focus is, your main strategy, the main market that you're investing in, why that's a great market to invest in. Don't get too carried away with charts and graphs and data and spreadsheets. Keep it pretty high level and be able to go through it very, very quickly. All right. Start off with that. Then show people who your power team members are. Make them understand that you're not a one-man show or one-girl show, that you work with a team on this. It's a team effort. All right. And then walk them through a sample deal. Big, big, big tip here for you. Ask me how I learned this the hard way. Make sure that the sample deal you walk people through is kind of a plain Jane deal. Not the best deal you've ever done. Back in the day when I was first doing this, I had a couple of deals that had been absolute home runs. And I was so proud of those that those were the deals that I featured. And then either one of two things would happen. Either the person I was presenting to was pretty unfamiliar with real estate and the returns I was showing them were just outside of their context. They were too good to be true in their minds, right? They were accustomed to making 2 or 3 or 4% return on their investment with stocks or bonds or mutual funds. And here I am, I'm showing them 15, 20, 25% returns. They're going, ooh, I can't believe that. That sounds too good to be true. So they got turned off. Or just actually even worse would be that would kick in the greed glands. They'd say, oh, those are the kind of returns he's getting. That's what I'm going to expect. Well, guess what? You're not going to be able to hit a home run every single time. So I got that person on board as a joint venture partner, and then the deal ended up only making 14%, even though they were accustomed to 2 or 3%. It's still, I had their expectations too high in the first place. So a much better idea is to take good old Tom Peters' advice, under promise, over deliver. So show them kind of a plain Jane kind of a deal and set their expectations lower, and then do your best to exceed that, because then you're going to look like an absolute hero. All right. So that's the big tip there when it comes to your investor presentation. Now, a great example of how good a really good investor presentation can be is our client, Brendan. Brendan, when we first started working together, was a young, upcoming, keen real estate investor. He had 1 or 2 deals under his belt that he'd self-financed, ran out of cash, ran out of credit, like we all do. And that's when we started working together. And one of the first things we did was we created a really good investor pitch deck. And he ended up doing a presentation with a friend of his mother's. And the lady was so impressed with Brendan, she was so impressed with his presentation, she said, "Hey, you know what, Brendan? I'm in." He said, "Awesome, that's great." He knew he had his next deal lined up. He said, and then she said, "You know what? I've got a couple of friends that should really see this presentation." So she called over her friends. He did the presentation again with her 2 other friends, and he ended up getting 3 investors from that very first presentation evening. Now, that was a bit of a home run. That might have been beginner's luck, but I think a lot had to do with the fact that Brendan had a really solid presentation. Makes a huge difference. He's able to do his next 3 deals just from that first presentation. And that's the kind of impact a really good pitch deck can have for you as well. My last tip on how to use OPM to buy more real estate is to manage your investor relationship very, very closely. So once you get a joint venture partner on board or investor on board, don't ignore them. Don't just send them the payments and assume that everything's going well. Have regular meetings with your investors, especially if they're joint venture partners. Even if you're sending them those regular payments, get together once a quarter or once every 6 months and walk them through what's going on with the deal. The good, the not so good. Give them a report. Let them know what's happening. Very, very important that you've got this regular reporting with your investors. This gives you an opportunity to touch base with them, make sure they're happy with how everything's going, maybe get a testimonial, who knows, maybe even get a referral if things are going as well. So always make sure that you're having good, open, regular communications with your investor partners. All right, speaking of OPM to buy real estate, if you're looking for some, here's the solution, my book, The Money Partner Formula. I'm going to drop a link in the description below. You can get there, or you can go to investorattractionbook.com. And this book walks you through my entire, what I call, money partner formula. That's exactly what it is. A formula from going from 0 to raising your first 6 figures in a matter of weeks and even 7 figures in a matter of months by accessing other people's money to do more deals. So if you're looking to scale, if you're looking to grow, if you want to take your real estate investing to the next level, go ahead, grab a copy of my book today. You'll like the price. It's free.